won't do any recaps until after the lesson is over, but this is the screen that I'm starting on. What I want to go over, okay, obviously you saw the flyer, Zach already told you, right? We're going to get into some trade management. Now, before I show you this outline that I made, I think like a couple months ago, never really used it, like never pulled it out for you guys yet, but here it is. Now, I want you to understand this is not a set in stone, end all be all. John said it, so I'm going to follow it 100%, you know, um, guideline. Okay. Think of it more as seasonality or open interest, where it's like it's a guideline, but you can fine tune it a little bit more based on the way that you want to do things. Because remember, there are different market conditions, there are different trading styles, there are different trading personalities, right? Scalpers, position traders, day traders, swing traders, and things of that nature. So if you're the kind who are taking notes, make sure that if you feel you need to add or subtract something to tailor it to you, the individual, then please do so. Okay. Don't let me stop you. Don't necessarily take this as a 100% um deal. All right. So I made this in Word as well. All right. So this is kind of what we're going to go through. I don't want to zoom out and show you the whole thing. I'd rather go step by step. Plus, I don't want you guys to screenshot this anyway because I don't want this on Instagram. And that just is what it is. But so we'll go ahead and start, and we'll go ahead and walk through a couple of scenarios in this presentation that maybe will help you in your future trading, or maybe for the individuals who are struggling with managing a trade once you're in the trade. Whether you're trading on your own or whether you took a trade idea and you don't know what to do after that. Should I hold it to take profit? Should I get out? What should I do? Right. And so let's go over basically from the beginning. So you're going to hear a little bit of Mark Douglas, okay? Of course, one of the goats. And so obviously, I might use a little bit of his language. So just giving a little bit of credit where it's due. So let's go ahead and start. The first question that I would ask myself is, does price action show an entry signal based on your methodology? Right. And it's either going to be a yes or a no. There's really no gray area. You have a trading plan. You have the tools, whatever tools that you like regarding smart money, or if you're not a smart money trader and you want to base trades off of other things, whatever your methodology is, you either get a signal or you don't. Okay. So now let's go through the no first because it's actually a little bit shorter. So does price action show an entry based on your methodology? No, John, it doesn't. Well, this should be easy. So if the answer is no, okay, the response is do not trade, right? And I know that seems like kind of obvious, but you would not believe how many traders, and including myself, growing up as a trader, will try to force the market. Okay. And so if you have this guideline, it might seem very elementary, but you wouldn't believe how many people still make very simple mistakes. Okay. So simply don't trade. Right. So what should you do instead? Practice patience. Okay. Some of us like to say sitting on our hands, you know, doing something else, just not trading. Right. And then that's probably a good opportunity to go either read a book, watch Go Live recordings, or even, do a private Zoom calls with your team, something of that nature, but just don't trade. Okay. And it's that simple. Now, starting over, does price action show an entry signal based on your methodology? Yes, it does. Take the trade and use risk management, right? And that kind of comes from Mark Douglas as well, right? If you've seen his YouTube series or if you've read his books, if you're getting an entry signal, stop thinking and just take the trade. And sometimes it is that simple. But I had to add in and use risk management. Okay, always, always, always use risk management. So now in this particular scenario, you're taking the trade, or either, like a live, what's it called, a market order, or maybe you set a limit and your limit was triggered and now you're in the trade. Okay. So now the next question is the trade relatively quick to profits? It's either going to be a yes or a no. Okay. It's either going to, zoom higher if you're in a long position, or it's going to drop lower if you're in a short position, or it's kind of just going to move sideways. All right. So again, there's really no gray area. It's either yes or no. Now, the reason I put relatively quick to profits is because, some of us are scalpers, some of us are position traders. So it's going to depend on which time frame you're trading, which day of the week, which session you're trading. There's a lot of variables in here. Okay. So, like I said at the beginning, you will have to fine tune it a little bit more. But, like, say you're trading off the 5 minute time frame. Well, if you're entering, say, off a 5 minute institutional candle or a 5 minute imbalance, if like 15, 20 minutes goes by and your trade is not in the profit, probably not a trade that you want to be holding. Okay. So, excuse me. Let's go with that first. Okay. Let's say you took a trade, whether it was market order, maybe you set a limit, and you're in the market, it's a live trade. Is it quickly into profits? No, John, it's not into quickly profits. So what do I do? Well, what I would do is pull out with a small loss or a small win, which would either way count as a break even in my book, and then wait for the next trade. So I think some people still struggle with that. And even I do very once in a while as well, because you want to see the trade go into profit and you don't want to purposely take a loss. But when you start doing this, and instead of risking a full 2%, maybe you take 0.5% loss, or maybe you take a 1% loss. So even if it's smaller, like say that loss is smaller than your original anticipated stop loss, then there's nothing wrong with that. Now, if you pull out of the market and then the market just turns around and rips into your favor and you missed out, guys, it's going to happen. Okay. Simply put, after you take a certain number of trades, it's going to happen. All right. That doesn't mean that you're a terrible trader. That doesn't mean your methodology doesn't work. It's just none of us are perfect. We'll never be perfect. And when you truly understand that, it's not going to affect you. It shouldn't affect you as much when that happens. And there's going to be instances where you pull out with a small loss, and then the market really goes against you originally. And so you might be thinking, well, I originally risked 2%, but now I only took a 0.5% loss. But man, if I held this, I'd be down like 10%. You know what I mean? So there's going to be pros, there's going to be cons, but at the end of the day, a small loss is better than a big loss. Okay, and that's just the way that I look at it. Okay, so pulling out with a break even, whether it's a small loss or a small win, then you kind of go back to the beginning, right? And what to do? Well, practice patience, go watch go live recordings, or read a book. Of course, there's other things, sniper course, host a Zoom call, whatever you want to do. Okay. Now, let's back up a little bit. Now, let's say we took the trade, whether it's limit or market. Is the trade relatively quick to profits? Let's say yes, right? Let's say we took a trade and the market is heading in our favor. Well, what do we do? So, what I would do is I would reduce the risk, right? Now, what that means is, and just kind of like I explained on this last part, if I initially risked 1% and the market is now going in my favor, my goal is to take risk off the table, right? I want to risk a little bit, and then out of that little bit, I want to risk as little as possible, okay? Because I feel capital preservation is number one, and then risk management from that. So if I'm risking 2%, I might bump it down to a 1% risk. Okay. Plus, it's really good, in my opinion, for psychology as well. If you're about to go to bed or if you're about to go to work, something of that nature, I think it would just be, I guess, effective or positive to be able to look at your um, MetaTrader 4 and say, okay, well, I'm risking X amount, but now it's half of that. So I guess I would feel a little bit better going to work or doing something else, with knowing that there's not as much risk on the table as originally anticipated. So there you have it. Now, here's another thing as well. Or you could set the stop loss to break even. Now, this is where a lot of traders goof it up sometimes. I'm not perfect. Definitely better than I was 6 years ago for sure. But I think this is a big bump in the road for many people as well. Is when do I set the stop loss to break even, or when do I put the stop loss in profit, and things of that nature. Honestly, I'm really gonna have to show you in the charts because there's really not a good way for me to explain it. But what I would look at is the speed of the market, where like if you take that trade and let's say it's just Euro USD, okay? The Euro USD has a relatively low daily range compared to like GBP USD, for example. If Euro USD say pops like 20 pips or even 30 pips within a couple of hours, I would feel it's probably safe to set the stop loss to break even. Now, if you're like 5 or even 10 pips into profit, the market's going in your favor, but it's not like rocketing in your favor. Like it's not like a rock star trade. I probably would not set the stop loss to break even. I'd probably reduce the risk. Okay. Now that's something that you guys are going to have to really gain knowledge with through the experience of it. It's really hard for me to teach you um, more on that side of the trade management. We'll try and hopefully go through some examples after this portion is over. Um, and we'll kind of go from there. I know some of you trade exotics or some of you might trade gold, and things like that, but moving your stop can be a very complex situation. It can be a complex road. Because I know a lot of us have done it in the past where, you'll take the trade, you set the stop loss to break even or maybe even slight profit, and then boom, the market comes back to you, takes your stop loss, you get out, and then boom, the market really rockets in your favor. And now you're like, well, wow, now you're not in the trade, you took a loss on it or whatever, and you missed out, right? Because you moved your stop loss too early. So yeah, that's going to be something that you're going to have to, get some experience on, and really study the market. And this is why I tell my students and I tell you guys, like over and over and over again, that you need to study the market, because there's always something to study, fam. I'm trying to tell you, okay? There's always something, right? We're giving you lessons, we're doing this, we're doing that, and with what we're giving you, guys, you can do unlimited back testing. So if it's Saturday, you're not doing anything, you don't have a call or whatever, and you want to study the market, but you don't really know what to study, guys, you're slipping. All right. I love you, but you're slipping. All right. Um, this is the type of stuff I want you to be studying: speed of the market, structure, liquidity runs, imbalance, whatever the case is. Okay. And this is no different. Trade management is no different. All right. Um, but enough ranting. We'll continue. Uh, assuming that, let's just recap for a second. We took a trade. Is it quickly into profits? Yes, it is. Say we reduced our risk, or say we set the stop loss to break even. Now the trade is progressing. Okay. So later on, whether you went to bed and you woke up, or maybe it's a few hours later, or maybe it's post news, something like that. Does the new market data support your trade? And this is also kind of what Mark Douglas talks about, right? Where you're looking at the candlesticks, and we've talked about this before, right? If let's say you're in a long position, are you getting big up candles and small down candles? Or are you getting big down candles and small up candles, right? What's the market telling you? Now, this can be hard at first because I know a lot of you, or a lot of trader, I don't want to say you guys, not specifically, but a lot of young traders, when they get into a position, their their eyes don't go to market structure or market data. Their eyes go to the MT4 on the part where it displays blue or red. You're looking at your money. Is it going up? Is it going down? What's it doing? And so you're not focused on what the market's telling you, and that's where you're screwing things up. Because the new market data is going to tell you to either put your stop loss at break even or hold the trade, or I should get out even though it's not at my original take profit, but conditions change. I don't think this is a good trade. I'll just pull out with the profit that I have. You won't get to that point if you're just looking at the blue or looking at the red. All right. So again, I would not focus on the money aspect or even the pips aspect. I would look at what is the market telling me. And I know it's hard to do. Practice, 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 practice. Okay, I can't stress that enough. Right now, sometimes, guys, I won't rant too much. I promise. Sometimes these lessons, okay, they're boring, right? Because oh, it's just John talking, like whatever. I want to get to the charts, guys. Trust me, this is a big piece, okay, to the puzzle. All right, it's not going to be the biggest piece, but it is a big piece, or is a piece to the puzzle. Okay, and a lot of people might not have the best trade management, and that could be the key that's holding them back from being a successful trader is trade management, possibly. So this is why we do this. You have to get through the boring stuff to get to the good stuff. Okay, that's just how it is. But anyways, so does the new market data support the trade? No, it doesn't. Okay, pull out with a small loss or set the stop loss to break even and let it run. And then practice patience, watch go live, or read a book, or maybe even review this video, the lesson that we're doing right now. Maybe go back and rewatch this one. Okay. Now, assuming that the market data does support the trade, right? The market's really going in our favor, and the market, say we're in a long position, the market keeps going higher and higher and higher. Well, that's great. So the new market data supports the trade. Yes, it does. Okay. Hold to take profit. Hold to take profit. I want you to think about this. You don't have to put it in chat if you don't want to. We'll get to the chat in a minute. Okay. How many times have you gotten out early just to see the market go to your original take profit? How many times has that happened? I know it's happened to you before. All those people who were like, yeah, John, that's happened to me. I know it has. I absolutely know it has because it happened to me too. And I'm sure Zach and Jordan and every other trade house educator can verify that we've gotten out early before, only to see our original take profit be hit. Okay, so this is why that's in there. Hold the position to take profit. Hold it. That's all you gotta do. It's just hold it. Okay, and it's as simple as that. And just give me 1 second, guys. Zach. Well, we'll definitely discuss that if you want to. But yeah, just hold it, guys. And so, with that being said, now that the trade is over, right? So it either came back to your stop loss or went to your take profit. It went somewhere, right? What happened? Where did it go? So was the trade a winner or was it stopped out? And then this is also where studying comes in as well, because you actually need to do both. You need to study the wins and you need to study the losses. And if you don't study your losses, well, now you know why things aren't going so well, but they could be going better potentially. But anyway, so here's the last part of it. Was the trade a winner or was it stopped out? Well, if it was a winner, that's great. Document the trade and wait for the next setup. Now, this part's important document the trade. Okay. This is why last year, about a year ago, even Zach came on to the session with me as well, and we talked about some of the office supplies that you should have, printer, paper, yada yada yada. Having a trade binder was one of those suggestions from like literally like a year ago. And this is why: print off your charts, print off the before, print off the after, or maybe just print off the one screenshot, maybe with some annotations like, hey, I entered the trade on Tuesday, took profit hit on Thursday, yada yada yada, whatever. Okay. And then just wait for the next setup. And there you have it. And then that way, a couple months later on, when you forgot about the trade, you can go back and study it and realize, hey, you did a good job. What could I do better? Or what did I screw up on? Okay. And then, of course, it's very similar to, let's say you were stopped out at break even, or maybe instead of a 3% gain originally, maybe you took a 1.5% gain because you pulled out for whatever reason. Again, document the trade. So funny how both of these, right? Document the trade, whether it was a winner. Document the trade if it was a loser. Okay. That's not a coincidence. That's not an accident. All right. So if your trade was stopped out or you didn't take original take profit, document the trade. Here's a big one: figure out what went wrong. I think this is where a lot of traders also kind of screw things up a little bit, is they don't figure out what happened, right? And trust me, guys, I'm going to say this a third time. I'm not calling anybody out. I have went through this as well. I used to take trades, they would lose, and I would just move on, and I didn't learn from my mistakes. Okay. But you don't want to make the same mistakes over and over again. That's stupid, right? Especially if you're trading live, right? If you're taking consecutive losses over and over and over again, why would you want to do that? You know what I mean? So figure out what went wrong. All right. Well, John, I've only been in a month. I've only been in a couple of months. I don't know how to figure out how things went wrong. Ask, guys, ask. Ask your sponsor. Ask a trade house educator. Ask somebody who maybe will be able to help you understand what happened, right? Maybe you were trading on the wrong time frame. Maybe you traded on a Friday. Maybe you got in 5 minutes before the close on Friday, or there's an infinite number of things that could have went wrong. But this is a big one, guys. I promise. You need to figure out what happened, hopefully to prevent it in the future. You'll still make mistakes in the future, but those dumb mistakes, those rookie mistakes, need to be filtered out as soon as possible. Okay. And then, of course, wait for the next setup. And then, of course, as you're waiting for the next setup, then you start over, and then you're looking at price action. Does it give you an entry signal based on your methodology? Yes or no? And then you go through the whole thing again. All right. So I'm pretty sure we might have a question or two. I don't know. I've been getting a lot of questions recently as far as other social media platforms. So this is why today I chose to do this lesson for Power Hour, because I just felt like maybe people needed to hear this. Maybe hopefully you guys had a breakthrough or two. So